Good morning, distinguished guests, business leaders, ladies and gentlemen. On behalf of PwC and Business Day, I'd like to welcome you all to the Executive Roundtable on Nigeria's 2026 Budget and Economic Outlook. We're sitting here at a defining moment in Nigeria's economy. Our 2026 budget is not just a fiscal document, it's a signal to our priorities, it's a signal for our reform choices and of our policy direction. And today's conversation will not just be about figures, it will be about what the budget tells us, it will be about you and me. Today's conversation will really be about, we're not talking about assumptions only, but we want to talk about businesses, how it affects businesses, how it affects the investors, and how it affects our policy direction in the year ahead. And we have gathered an exceptional group of leaders right here in the room, experts like you seated in the room today. And we want the conversations today to be robust, we want it to be honest, and we want it to be solutions-driven. And we're looking forward to the conversations we'll be having here today. My name is Elizabeth Musa. I'm a broadcast journalist. I work with Business Day, and I'm going to be a master of ceremonies this morning. But before we begin, I'd like you to please look to the person closest to you and just welcome them. Good morning, possibly Happy New Year, because you might have not seen this year, so you could tell them Happy New Year as well. Good morning. Give them a warm smile. Happy New Year to you. You're welcome. Thank you very much. So real quick, we want to listen to our housekeeping. I have the representative from Eco Hotel, Mr. Augustine. If you could just please come up stage to give us a little bit of the rules this morning. All right, please.
Thank you, ma'am. Good morning, everyone. Good morning, everyone. Thank you. I welcome you to the Hotel Suite. I'm Augustine Odumoso by name from the Department of Health, Safety and Environment. So I'm here to give us a HSE brief in case of any emergency, to know our way about it, and also to get ourselves familiar with the environment. Okay, so there will not be fire this morning. But in the case of any fire alarm, please be expected to leave this hall. The emergency exit is behind us. We have one here. Then behind it, we have another emergency exit that leads to where we have the muster point. That is, the muster point is behind this hall. While we have our marshals also to do their work, while officers assist during this evacuation. Please, under emergencies such as a fire break, we are not expected to make use of the elevator. But we are expected to use the emergency exit as I said earlier. Under any emergency, we have in-house phone behind very close to the sliding door there. This, you can dial the number is 0 while attention will be given. Also, under emergencies such as medical cases, we rest assured that the hotel grant us assist to inform us that we have our clinic that runs 24/7. We train our certified nurses and doctors to attend to such need. And if it is major cases, the hotel partners with the hospital that is 5 minutes away from here, that's from the roundabout, where we partner with the ultra care, which I could be taken to such hospital before taking him or her to his preferred hospital. On security, we rest assured that you are in a safer environment. That is, we have both our internal and external forces working 24/7. So in terms of security, we are in a safe environment. Also, on security, it is very advisable that we keep our eye on our belongings, such as our laptop, phones, and its related. Also, on security, in case you are leaving this meeting and this hall, please let's relate with the inner security so that coverages will be given. On restroom is once we take it out of this meeting room, find your way to the front of the signature, then exit it by the first right. That's where we have the restroom for good ladies and the gents. Thank you for giving me your attention. Once again, I welcome you all to the Hotel Suite. Enjoy your meeting. Thank you.
Thank you very much, Mr. Augustine. Thank you for listening. Once again, please put your hands together for yourselves for being here this morning. Thank you so much for being here. Regional Senior Partner for the West Market Area for PwC, Mr. Sam Abu. Please put your hands together for him as he comes on stage for the opening remarks. Thank you very much.
So I'm honored to welcome you all to our 2026 Economic Outlook session. After 2 years of macro volatility, we need sharper resolve and real collaboration across all sectors. And I think many of those sectors are represented here today. To start, I want to take us through a few high-level data points. Much of that will be covered in the course of our conversations today that will guide us through our discussions this morning. Our 29th annual Global CEO Survey, which gathers insights from 4,400 leaders across 95 countries, reveals a world that is operating with two lenses. CEOs are looking at the world with two lenses. The first lens is a microscope. And why do we say microscope? Because with a microscope, you can see immediate threats, near-term threats, such as geopolitical instability, cyber risk, and the rising tide of geopolitical conflict. The second lens is a telescope. And with a telescope, you see long-term opportunities. You see strategic reinvention, tech, data, and AI, and the opportunities that exist because of what we're seeing across the world today. Let's bring it back home. Let's start with what has changed and what should be acknowledged and celebrated. Inflation has fallen to 14.45%. As a data point, 2 years ago, about a year ago, we were designated as a hyperinflationary environment by the IMF. 18 months later, inflation is 14.45%. It's something to be celebrated and acknowledged. The Naira has strengthened to 1,446 Naira per dollar. And FX reserves have risen to over $45 billion, providing a much-needed buffer against external shocks. Nigeria is standing on solid ground, or seems to be standing on solid ground, even against a backdrop of subdued growth and uncertainty at home and globally. Our 2026 economic outlook reflects the fruits of disciplined monetary policy, a level of stability many once thought was impossible or elusive. But we're not out of the woods yet. Stability isn't victory. It is a platform on which we must build hope, confidence, and sustainable growth. All the things we as leaders must nurture to make sure Nigeria's ambition is kept alive. The findings from our 29th Global CEO Survey in Nigeria Perspective revealed a striking shift in Nigeria business cycle. For the first time in years, optimism is surging. 90% of CEOs expect Nigeria's economy to improve over the next 12 months, up from 64% just last year. Even more telling, 56% are very or extremely confident about revenue growth over the next 12 months, compared with just 30% of CEOs across the world. So Nigeria is leading the pack in terms of CEO confidence. Ladies and gentlemen, optimism is real, but so are the threats. As inflation and volatility recede, they are being replaced with enterprise-level challenges that demand a different kind of leadership and a different kind of approach. Looking ahead to 2026, 4 priorities will define success for the Nigerian enterprise. 1, strategic reinvention. 2, tech, data, and AI. 3, cybersecurity and trust. And 4, sustainability and ESG. The 2026 budget also presents a delicate balancing act. Whilst we see modest revenue gains, debt service consumes roughly 45% of federal revenue, and the fiscal deficit is still a growing concern at 24 trillion naira. This underscores the need for proactive tax strategies and compliance at a strategic level, rather than merely a regulatory burden. So over the next couple of hours, together we'll explore our findings in depth, focusing on where growth will emerge across key sectors, how organizations can build strategic resilience against future shocks, how AI must move from experimentation to business transformation, and how to recalibrate capital allocation in a year where GDP is projected to grow by 4%. As we begin, my challenge to you today is the same challenge we set for ourselves at PwC: be bold, be collaborative, and be optimistic. In a year where 50% of CEOs worry they are not transforming fast enough, the biggest risk we face is standing still. Let us use this forum not just to observe the outlook, but to shape it. Welcome once again, and I thank you for being here.
Thank you very much, sir. Just as he mentioned, he did say that at PwC, slogan is to be bold, be collaborative, and this is a collaboration between PwC and Business Day. So I'll welcome again, with another warm applause, the publisher and co-founder at Business Day, Mr. Frank Aigogun, as he comes up for his remarks. Please put your hands together for him. Thank you.
Thank you very much, Elizabeth. And distinguished leaders of the private sector, I take the pleasure and delight this morning in welcoming you to the dialogue, and also to express my appreciation to our partners at PwC for joining with Business Day to do this morning. I see a lot of my friends here, and a special welcome to all of you. You know, I think it's important as we gather today to be quite deliberate in focusing on some key aspects of the economy, especially as they impact the performance of the private sector. Sam has already spoken so eloquently about many of these sectors. I will say to Sam, when we met this morning, that I haven't seen him in a while. We typically meet at about 5:30, 6 a.m. every morning, and I haven't seen him this week. But the fact that he's here and well, it's good. I wanted to just focus on one or two things before I get away, so we can get the conversation going. Our economy is at crossroads. A friend who is very good at watching the economy was telling me a story last year, as the year ended. There was a delegation by the International Monetary Fund that had visited Nigeria and spent some time with him. And they asked the question, how is it? We have been to an office, met the managing director on the 4th floor, and we asked him, how is the economy doing? And the guy said, never been better. And as they left or exited the company, they spoke to the gate men at the gate. How's the economy doing? Never been this worse. And I hope in your businesses, and as you deal with policy directions, that you are looking at Nigeria and looking at the economy through more than one lens. That's one message that I thought I should leave with you. The guy at the gate probably doesn't have a generator, as all of you have. Some of you probably have two, or even more. Michael Omolayole, who was managing director of Liber Brothers, a very distinguished CEO for many years, spoke about a story some years ago when power wasn't so good at that time. And his board had asked him to go to his neighbor in Apapa, who then was energy advisor to President Shehu Shagari. And he went to him after work and said to him, you know, we have a problem. And this fellow asked him, what problem? He said, well, we're noticing that power supply is not very good. What's happening and what's government doing? And this fellow, Yahaya Diko, his name, said, you don't need to worry. Government will fix this in no time. You know when Shagari was president, don't you? And this fellow, Dr. Molayole, went back to his board and said, my neighbor told me you don't need to worry, but I don't believe him. As of that week, Liver Brothers didn't have a generator. By the time Dr. Molayole left as managing director of Liver Brothers, they had 17 generators. I can bet you they probably have up to 100 today. So again, another lesson, when you look at Nigeria, what do you see? But it's not all bad news. I'm sure my friend Tony, who's sitting very close to his collaborator, will say here, we have some great things happening in the energy sector, things that inspire us. I'm not saying that the progress has come cheap, but the progress has come all the same. And I hope, when you look at Shell, saying that there is a chance they can invest $20 billion, not in Guyana, but in Nigeria. I think that's something that I hope the government doesn't just engage in only celebrating, because to make an announcement of an investment is one thing. For that investment to be actually consummated is a totally different thing. And I hope the government is doing what it must to handhold everyone, including Shell, as big as they are, to ensure that it's not just a mere announcement, that you are able to clear all the bottlenecks that can and I believe will arise that may begin to deter that investment from happening in Nigeria. Finally, I would just want to, since we're going to have a conversation on budget, I just want to talk about something very critical. Yesterday, I sat down for quite a while with a friend of mine, an academic, who is currently doing a research around 4 different countries, including Nigeria and South Africa, just trying to understand how governments in these economies are enabled to be governed. And he said to me that we focus in Nigeria on the leakage, the bottom line, that his initial understanding from the research that he's doing indicates that we have a greater top-line problem in Nigeria. He says, for instance, looking at these other countries who have already built their infrastructure, built their health services, built great educational systems, they are probably spending, governments I mean, what they need. Nigeria is only able to afford 30% of what we need to develop as a nation. So 30% you have, not factoring in the stealing, but the problem is 70% is absent, probably more, given our size of population and given where our infrastructure situation is at today. So that brings me to the question of taxation. He believes, for instance, that Nigerians should pray to be held accountable to pay tax. Because it is only when they pay tax that they would actually demand from their government the excellence that Nigeria requires to join developed nations. I don't know what you think. But it's not just about paying tax. It's about, and for me this is the point that I want to leave you with, the role that the private sector has to play in energizing not just payment of taxes, but building citizenship advocacy around holding authority accountable. You don't want to just pay the tax for that tax to be stolen. You want to pay tax, better still, you want to demand that your government does the right thing with the tax revenues. We are seeing increasingly from the data that we have at business day, some states already beginning to declare surplus on the back of significantly rising revenue available to the states. But what are they doing with the money? The crude way is to say that when they get the money, they go to BDCs, exchange it to dollars. They probably do that. But our data suggests that they are not impacting their people more as much as their revenues have surged. These people in the states are your employees, if not your brothers and sisters. So ladies and gentlemen, we all have a responsibility to make Nigeria a greater country. Thank you very much and welcome. But before I take my seat, let me offer or let me announce that everyone who is here today that does not currently get a subscription to Business Day Digital Services will get a subscription to Business Day's premium service for 1 month simply because you are here this morning. Thank you very much.
Thank you very much, Mr. Frank Aibogun, and thank you very much to Mr. Sam as well for opening in a way that has really set the tone for the conversations we're about to have here today. We're moving into the agenda, but I would like to acknowledge the presence of Mr. Uyi Akpata, is the immediate past regional senior. Thank you so much for being here, sir. And I'd like to make welcome now for the 2026 West Africa Macroeconomic Outlook, a partner, chief economist and strategy and lead for West Market Area, Mr. Olusegun Zaccheaus, for his presentation. Please put your hands together for him.
Good morning. Good morning. How are we doing this morning? You know, there's been a lot of conversation around macroeconomic outlook, that I guess by now, everybody here must be able to do a 30-minute conversation on it. All right, so what I'm going to do over the next 8 to 10 minutes really is to take a West African view to what the outlook is, and then spend a bit of time talking about the key trends that we believe will shape 2026. And for us, it's very important you pay attention to these trends because you don't focus on the outcome. Once those trends play out in a certain way, the outcome is already predefined. After sharing that, one of the things I think is important for us to pay attention to in 2026 is the issue of what we call shocks. Shocks are certain unexpected events, right, of certain magnitude that can disrupt your entire assumptions for planning, for raising funding, etc. and all that. And then I will land up with what our view of what the scenario for 2026 is. But whichever way you look at the outlook, I think it's a positive outlook. So I don't have any bad news. So the press people, you may not report this presentation on the lighter. Just for me to start, if you take a view of the West African axis, One of the things you notice is 2025 was also a year of some sort of stability, in which critical economic indicators move from what you call massive variance. So you see, as Sam said earlier, you see Ghana inflation being significantly high, moving down to single digit like we have now. You've seen that in Nigeria. So you see a lot of stability across the axis. I think for me, that was one of the best things that happened in 2025. And when you look at the monetary policy environment, which is essentially how the central bank manage liquidity and money within the economy, right? And what you notice in 2026 is that there were raised interest rates just to be able to manage inflation. But as inflation kept coming down, right, quite a number of central banks started doing adjustments to their interest rates. So you see Ghana, having followed the news yesterday or 2 days ago, they had a dramatic reduction in their interest rate. Nigeria, we had a bit of reduction, and I'm sure I will talk about the reasons why the pace of reduction may not be as we expect it to be. So give or take, the West African axis, it's good. Let me use that word in summary. We expect 2026 to even be better, and I'll explain 3 reasons why that will be. For a number of the economies, right, what you're going to see is that there are a couple of sectors that will drive growth, right? So Nigeria, oil and gas will do better. You go to Ghana, you realize that mining will continue to do greatly in 2026. Then you look at the issue of macro stability, which will then sort of drive investment attractiveness of those countries. So we see this improve significantly in 2026. If I move away from the broad view of West Africa, and I want you to reflect on some of the points on this slide, to ask yourself a fundamental question: what will drive the economic outcome in 2026? There's a couple of points, and thanks, Frank, you noted some of those points, and also Sam, right? There's 7 points we sort of articulated that you have on the screen. I'll speak into a few of them. One that is fundamental and is also structural is the issue around security, and everybody knows about it. When you ask us the question, how do you see this resolved in 2026? We don't see this resolved, right? We still have to contend with this significantly. Why? Obviously, you started seeing the political alignment, given that 2026 is a pre-election year. Some issues are supranational, which means the issue around terrorists, etc., and another issue that goes beyond Nigeria will continue to contend with that. So that, for me, may be a critical issue, downside for us to deal with in 2026. But if I move away from that and talk about the monetary policy environment, I think when I talk about this is where I get a bit excited, because this is where we have more stability. And we expect that stability to continue in 2026. But it's going to be at a price, right? And that price is that interest rate will not go down as fast as we desire it to be. What interest rate will go down, it won't be like we're cutting maybe like 500, 600 basis points from interest. So interest rate will still be relatively high. And you ask yourself, why would that be? Obviously, we said inflation came down dramatically, and it will continue to come down because that's our outlook. But there are other pressure points that I think the monetary side needs to pay attention to, which means money supply within the economy, which if you look at the statistic, pre-election, it always go up, right? So you need to manage that liquidity so that it does not really have negative effect on the FX. So what we see from monetary side is that it will be stable environment. We also think FX will continue to be stable, but interest rate is where we will see not going down as much as you see in other countries. If I move away from fiscal, and my colleague Ken will spend a bit of time on that, I think there are a couple of points which he will highlight, and for me is around the point around fiscal sustainability and the ability to execute the ambitious target you set in the budget. And Ken will talk about that. I think 2 important points for me to pay attention to when you think about 2026 is for those in consumer market, and we are one of our panelists, right? And we don't think consumer will recover as fast as the broader economy. And thanks for the analogy again, right? Because from a stability side, we see positive. From an investment side, it's positive. But the gap between investment and economic growth and job creation takes a lag, right? So given that there will be better consumer recovery, but there won't be acceleration of consumer spending. So that is also going to be a bit muted, but better than what we had in 2025. The last one is also around what I call the sectors, right? And thankfully we have a lot of sector experts here. What we also see is an uneven outlook across the sector, right? We see, and if you take a couple of dimensions, like, right, what sectors are taking investment? What sectors do you have consumer or demand increasing dramatically? What sector do you have significant reform, and what sector is technology driving productivity? There are a couple of sectors that sort of are doing that. So you see services. Services will always be good, right? Oil and gas, because of improved investment, will always be good. But sectors that are dependent on maybe import, significant consumer spending, like manufacturing, it will get better, but we don't expect dramatic growth, like we used to see in the past. So that's the uneven outlook that we see across the sector. If you move away from that, and for me, if you're not going to take anything away from today, is this slide. The world is becoming increasingly stable, unstable. Let me use that word, right? Because if you really realize that actually there was a military attack in Nigeria by US, and it just happened like that, and it felt normal. Right? That's abnormal. That's abnormal, right? You see quite a lot of things that are happening, and you see from a sovereign, from geopolitical perspective. I don't know how many of us have seen what is happening. You see deal being signed by EU with India. You see Kistama in China trying to strike individual deal. Those developments portend some major, shock potential, especially for developing economy like us. So I'll speak to this shock. One, is oil, an oil market production shock. And I think Ogatoni will tell us a bit more what's going to happen with Venezuela. I know there's been a lot of, catching, so to speak, the dark fleet, right, moving the Venezuela and the Russian oil, etc. and all that. That have significant implications, because if anything affects oil prices, right, or oil production in Nigeria, it means a lot of assumption around our budget and even our FX availability will be negatively impacted. The second point is on FX and capital flow. I'm not so afraid of this, except there's a funny US policy that's essentially say if you don't put your money out of Nigeria, I will do something odd, like particularly we have to trade. We don't expect the capital flow reversal. And why is this? You can see that Donald Trump said that the person that will take over, the Federal Reserve must be someone that will lower the interest rate, right? So if the interest rate remains low in global economy, it means relatively, they will continue to search for yields, which means we'll have some decent capital allocation. But that could potentially be reversed by a policy that is not planned for. I think the last one that I will highlight here is geopolitical and trade shocks. That for me is one of the most likely shocks. And the truth is that you can't sort of skin it, right? You can't skin how it will come, the way it will come. It's like, it's now a multipolar world, and the polarity is creating some sort of fragmentation, and trade economy is now used as a weapon, right? And I hope we don't become a collateral receiver of some of the negative impact. Right. So these are the things that you need to think about. How will your business sort of respond if any of this shock precipitates in 2026? To begin to wrap up, right? I think if you look at the dynamics and around the outlook, I think it's all positive. I've been talking about economy for a while, right? This is the time I can see all the numbers sort of stack up on the positive side. You look at inflation, you look at GDP growth, you look at interest rate that I also talked about. It may not increase dramatically, but we expect it to go lower in 2026, both for Nigeria and Ghana. That's the outlook we see. But one point I'll leave you with as I sort of wrap up is is to encourage every business leaders here to also adopt scenario thinking, and that's what this slide shows. Really, what are the three possible scenarios now talking about Nigeria? What we've shown is that you have the upside, base case, and downside. I think what is key, if you look at all the scenarios, the downside is even about close to 4% growth, which means it still would be what you had last year. Right, but I think one of the key takeaways, which is our message today, is as you think about your business, think about the future, you must bake in this scenario thinking around the economic outlook. And what could make the scenario swing in very awkward or odd direction is if some of these shocks, that I talked about earlier, sort of precipitate. So in summary, 2026 is a better year, right? There are a couple of risks. But in summary, we think Nigerian economy will do better and West African market will also do better. Thank you very much.
Thank you very much, Zacchaeus, for that brilliant presentation and, of course, for highlighting some of the areas that the outcomes of 2026 will be bordered around, which is around oil performance, FX stability, and policy credibility. And on that note, I'd like to also make welcome for the 2026 budget outlook, Nigeria's 2026 budget outlook, another presentation from Partner and Tax Reporting and Strategy Lead, Mr. Kenneth Erikume. Please put your hands together for him. He's already on stage. Thank you very much.
Good morning, everyone. Okay, so I had to figure out that this was the microphone. So my job here is just to follow the conversation and the foundation that has been laid by my partner, Zacchaeus, and speak to the budget, essentially. Now, I think consistently, it's no longer news that we have run budget deficits consistently, for several years. But this graph shows an interesting picture because while on the one hand, particularly in relation to recurrent expenditure, we outperform. From a revenue standpoint, consistently, the performance of the country has not been great. If this was a personal picture of my personal finance, my wife would have filed for divorce already. Because you cannot have a sustainable, entity where you have consistent expenditure outperforming. But the big one, I think, that we all need to pay particular attention on is the capital expenditure, particularly in 2025, where the slowness in release of funding meant that we have essentially been running had the carryover of some of the 2024 budget into 2025. And that creates a material pressure from an economic standpoint because the investments that government had to make at specific times did not happen. And that puts a time reset on your ambition to build a $1 trillion economy, essentially. So government has to do certain things to actually address that risk. Particularly, number one is from a revenue perspective. And how do they do that? I think one of the big things that has been in the fore of CEOs today is the tax reforms. And while the government hasn't done a lot in terms of increasing, tax rates, there's a lot of focus around deepening tax administration through efficiency, using data, and using technology. Without that sort of reset, it will be impossible to do that catch-up. Obviously, there has to be a time reset as well. Considering that we're running huge debt already as a country. We're sitting as at mid last year on at least 152 trillion in debt. The government obviously still needs to finance with some more debt, but obviously revenue has to be critical, as well as efficiency from the Nigerian customs as well. So weak earnings, particularly in the oil, contributed to this, as well as from a customs perspective, because the Federal Inland Revenue Service, which is now the Nigerian Revenue Service, exceeded their budget. Now they say one of the best ways to look forward into the future is to look into the past. So what was 2025 like? In particular, I think, one of the things that we usually look at and sometimes scratch our heads on is the metrics used and the assumptions used in the budget. And particularly from our side at PwC, we looked at the 2025 budget and sort of looked into our crystal ball and tried to make some predictions. In a similar event like this, we also had those predictions modified through contributions of participants, particularly in the area of crude. We believe that the price was going to be stable. Of course, there was obviously challenges in terms of the emergence of a new president in the United States with an ambition to increase the number of barrels within the United States. Obviously, some of those geopolitical risks that my partner highlighted impacted the price of crude. The other one, which I mean, obviously from the last slide, is very important from a Nigerian context, irrespective of the conversations around climate change and sustainability, is that we have the mineral resource internally that we need to mobilize. And the government was very ambitious with their projections. But we're very clear that in order to meet those ambitions, investments need to happen, particularly in the area of security, to get the produced hydrocarbons to the terminals and evacuated into the international market, but also investments into new discoveries and extraction of those minerals. And we think that that is still, particularly in 2026, something that remains a challenge for us. There's been divestment by the IOCs to indigenous participants with clear commitment that they need to scale up production. But the thing with oil and gas is that it requires a bit of a lead time between when those investments happen and when you begin to see the outcomes. And the thing we celebrate the most, of course, is our exchange rate. This was one of the most talked about conversations at the beginning of 2025. And interestingly, some of the measures by the central bank, the monetary policy tightening, and sometimes we groan and we moan about the interest rates. They have remained quite steady, holding the interest rates and ensuring that they are able to manage the money supply. And this has ensured that we have also been able to manage the demand for FX, the mobilization of Naira looking for FX, for people to store their funds in FX. Having said that, I think some of the measures put by the central bank around more transparency in the foreign currency market, as well as all those monetary policy interventions, has yielded fruit. As Sam said, even the improvement in the foreign reserves gives the central bank more flexibility to protect the currency. Of course, GDP growth rate would also be important. And I think where we sort of moderated the conversation largely with the big concern around inflation was that if you hold the currency stable, then inflation will be under control. And with the impact of the base effect, considering that we're not starting from a lower price context, meant that inflation could actually be managed within the 15% mark. And in reality, those numbers I've highlighted there on the screen are actually averages. And as Sam said, we are on 14.45 as at today. And it's something to be celebrated. Now, for 2026, we're still going to borrow. There's no magic wand we're going to wave. If the government is going to be able to fulfill those ambitions, then we're going to borrow. Geopolitics and what is happening in the US could impact the attractiveness of our government debt leading into the future, especially how it pans out with the appointment of a new Federal Reserve overseer and how that plays out. But obviously we still need to borrow, and some of the backlog we've seen coming out from 2025 still needs to be addressed. And the reset button that government needs to actually set may require, like I highlighted, mobilization of more revenue. One of the ways when I showed you that picture around dealing with that situation where your revenue is not commensurate with your expenditure is to ask for a pay increase or to change jobs. And that is what government has done with the tax reforms. With the tax reforms, government strategically wants to be able to mobilize more revenue. But over and above that, government needs to borrow. But if I were to advise government, I think more needs to be done around mobilization of revenue by monetizing government assets, because that's one of the ways you can quickly plug that gap. In addition, considering that there's a backlog of that infrastructure development, there has to be private sector participation to plug that gap. Now, interestingly, and I think it's highlighted in this slide, when you look at last year, a lot of people celebrated the budget, but when you look in dollar terms, our budget wasn't really increasing in reality. So the difference between the 2024 and 2025 was just $2 billion. Now we actually see an improvement, a marked increase in the budget in actually dollar terms to $41 billion. Now when you add the budget of the states to that as well, you get to about $70 billion. Now that is massive, because we have both at the subnational level and at the federal level great ambitions around infrastructure development and so on and so forth. But to put it in context, that investment by government is not enough. And I've forgotten who highlighted it. I think it was the chairman of Business Day, highlighting the fact that, when you look at the investment of countries that have already developed, they are still actually far ahead of us. Take South Africa, the budget per capita is at the region of $2,325. Mexico, $4,000, but for Nigeria it's a meager $288 per capita. It tells you that the government cannot do it alone. There has to be private sector participation to unlock the potential of the country. Number one. Number two is that for the first time in a long time, there is actually alignment between the fiscal strategy of the government and the tax strategy. So people have to pay close attention to the areas of focus of government. And I'll highlight that on this final slide. Government is keen on elevating the investment around healthcare, education, and although infrastructure is down by 12%, when you look at the government's medium-term expenditure framework, there's a lot of concepts around PPP interaction and mobilization of the private sector in that space. It is important that we really look critically at where government is paying focus and attention on. There is the economic development tax credit of 5% of investments that companies make, and then there is a 5 years tax holiday for gas infrastructure as well, with a possibility of extending that by another 5 years of tax holidays. Now, that tells you where government is focusing on and alignment. And then the final thing is agriculture as well. Now, there's a possibility from an agriculture perspective to get significant incentives as well. And those are the areas that government intends to play. But I'm hoping that with the interaction from these conversations, especially when we look at the oil and gas, the tech space, and some of the critical areas that Sam highlighted, including sustainability and ESG, and so on and so forth. In this forum, we'll be able to unlock some clear ideas around what we should be doing as executives. Thank you.
Thank you very much, Mr. Kenneth, for that very insightful presentation. I recall at the start of the event, I did say that we're not just going to be looking at the figures today, but we're going to be talking about the assumptions behind these figures and how it affects businesses, investors, and our policy direction in the year ahead. So thank you so much for doing justice to that and building on what Mr. Zacchaeus had also shared earlier. So thank you very much. Please put your hands together for him once again for the excellent job that's been done so far. At this point, we'll be going to a panel session to just build on some of the conversations we've started to have from the start of the event, and I'll be inviting someone, a very vibrant, energetic, powerhouse. This is not me doing the woman thing. Please put your hands together for Esiri Agbaye as she comes up to moderate this panel. She will be calling up the panelists.
Thank you so much, Elizabeth. And on that note, I'd like to introduce my panelist, Mr. Tony Atta, the MD of Renaissance Africa Energy Company. I'd also like to call on the interim MD. She said I should put the interim Managing Director of PwC Nigeria PLC, Mrs. Kolase. And I'd like to call on the Managing Partner and Co-Founder of Verod Capital, Mr. Danladi Verigen, and Mr. Wole Abu, who is family for us, the Managing Director of West Africa Equinix. Last but not least, our dear friend in the house and the host of the day is Sam Abu, the Regional Senior Partner for PwC West Africa. So we've listened to, you can sit there. We've listened to Shego, we've listened to Ken. The macros that were shared seem very positive. I should use this one. Okay. All right, thank you. All right, so I think we've gotten that good intro to set the stage for the discussion which we're going to have today, which looks at the shocks the macroeconomic conditions, and also the fiscal situation in the country, which doesn't look so great. When Ken showed us the slide that compared us with other countries, I think that was where I got sad for the first time in this session. But when Shegun was speaking, I was like, yeah, positive. And Ken just had to come and tell us, look, this is the stark reality. Compared to other countries, the budget per capita is ridiculously low. And I think there are major opportunities here for public-private sector partnerships. So it's important that we got this intelligent group here of CEOs just to brainstorm on the realities for value creation amidst the shocks and opportunities. And I want to start off with Mr. T. I call him Mr. T. I don't know whether I should call him Tony on this, but if you give me the permission to call you Tony, I'll call you Tony. It's fine? All right. So, we've heard around the possibilities that the global oil prices might stay stable, save for some of the erratic policy shifts that we see around the globe. Just think about the bombing of Nigeria in recent times. You've been at the helm of affairs in one of the biggest, or still continue to be at the helm of affairs in one of the largest oil companies. And we're talking energy transition as well. I'd like to get your thoughts, and we all would like to get your thoughts on what your top priorities are and where you see the biggest value creation for us as a country and also in your sector.
Sound? Okay. Thanks, Cecilia, and good morning all. It's a great pleasure to be here amongst giants on this stage. When you have done Latin on your left, you are assured that you will be financed. Already a good sign. Calvary looks after everyone, so what else do you want? I think before I say much, it's important to establish that we are Renaissance. The importance of the name underpins who we are. It's a new beginning. It's a rebirth, a new era, and perhaps for Nigeria, the greatest opportunity on the back of the successful divestments that have happened. Many people have spoken to me during coffee break. They spoke to me like we've been around for 10 years. Actually, we are only 10 months. So 2026 will be one of our very first full year, if I could say that. To that extent, we arrived last year, March the 13th, very specific, we're about a year away. And for me, it was really about transition. So the whole of last year was about transition, for which we coined the transition philosophy to just safely receive the company and stabilize it before you can set it on the path of growth. If you imagine that Shell has operated this company for about 65 years, and then a Nigerian company is taking it over, there were many questions. I mean, one of the greatest questions we were asked, even on the negotiating table, and I must give credit to PwC, who was side by side with us all through the negotiation. I think a round of applause should be given. It really does speak to the power of partnership. They stay with us through the trench, and you can understand why we stay with them even now. But then, safely received, stabilized was a big deal for last year. It took a lot. We had a lot of questions to answer. The questions were very basic. Can these people do it? And I'll say these people because one of my shareholders sitting here, they were pointing literally at them. Can these people do it? Can these people afford it? Can anything good come out of Nigeria? Guys, this is Shell International after 65 years handing to a Nigerian company. It's unusual. What normally happens in the industry is when the IOCs are done and they are moving away, international independents step in, the parancos of this world. But what you are experiencing in Nigeria is as the internationals are leaving, Nigerian independents are emerging. So something big is happening. It's a massive change going on. I think to underpin the importance of that evolution, which may be very transient, and if you blink, you will lose it, is today 50% of Nigeria's production is under the production of this indigenous independence. And very soon we are going to have that surpassed quickly when we start to grow. But we set a very basic vision, I call it basic, but it's very Africa-centric. And it's uniquely different from the vision of Shell. Shell, purely a business entity in Nigeria, pay royalty, pay your tax, take your value and do whatever you like. So it was purely extractive. But we couldn't see ourselves as a Nigerian company functioning as purely extractive. Where do you want to create the value if you are not creating the value here in Nigeria and for Nigerians? So of course our vision is to be the African leader in energy. Very big, very robust. We took that to South Africa. I actually thought we would be challenged. But nobody stepped forward to challenge us. But they gave us trust, they gave us hope. And to that extent, you want to be the African leader. Charity, they say, begins at home. We want to enable industrialization of Nigeria through our products. We're an oil and gas company, and proudly so, we will stay so. When you talk about energy transition, there's a huge relativity there as to who is transitioning and transitioning to what. You actually can't transition from what you don't have. We're talking about Africa, where 50% of the population, over 600 million people, do not have guaranteed assurance to energy itself. And then the Western world is asking me to transition. Most times I say, what am I transitioning from? I think from the standpoint of Africa, Nigeria is about integrating our energy systems. It's about working to ensure energy security, because it is proven that energy availability or lack of energy is directly proportionate to poverty. So when you see a world that is advanced, economically advanced, they are energy rich. But the dilemma in Nigeria is that Nigeria has a lot of oil, Nigeria has a lot of gas, but we're energy poor. That is what Renaissance is about. That is what Renaissance is about to change. And that is the narrative we're actively working to with our vision to turn around. We see a bright future and are aligned with all the indices that are positive with respect to Nigeria particularly. Let me hold it here for now.
Thank you so much. I think that's a good segue to do for that here on energy security. Cadbury has been here for so many years, and you still continue to thrive. But we do see that there are demands as well from the real population saying the margins you might get, I don't know how high they are, but the prices, there's so much demand in making sure that the prices stay stable. And then you have the situation of energy insecurity. What are your top priorities going into 2026? And where do you see the value creation opportunities with any of these other industries?
All right. Good morning, distinguished ladies and gentlemen, and thank you very much, Esiri. First, let me introduce Cadbury properly to you. We're a member of Montevideo International and one of the largest snacking companies in the world. We're also listed on the Nigerian Stock Exchange. Cadbury has been here for 60 years. So it's not new to changes in the economy and the different shocks that has been experienced over the years. For context, 2-3 years ago, due to the volatility in the economy, the real sector was deeply hurt. Consumers too had to change their priorities based on what they could afford. And most companies in the real sector recorded significant losses. Issues around FX, volatility, infrastructural challenges, global disruption to supply chain, internal insecurities. There were so many that the real sector had to deal with, and they were significantly distracted. It was more of reacting, surviving, firefighting, etc. Now, 3 years later, I can confidently say that there is relief and there is progress. It might be slow, but we see growth, we see recovery, and we see progress. So in terms of our priorities, in view of the energy challenges and some of margin erosion, slow or low demand, our priorities is focused on profitable volume growth. And this is going to be anchored on few levers. The first one for us is smart portfolio and then price pack architecture. This is focusing on products that meet the needs of Nigeria. For example, in Cadbury, we produce much loved brands like Bonvita, 3-in-1 hot chocolate, and Tom Top, which I believe you have on your table. So we are going to focus on few SKUs that meet the needs of Nigerians and make them available in pack sizes that are affordable to our consumers. And this is how we will drive volume growth and protect margins. Also anchor on improvement in supply chain. Like I said, we've seen a lot of improvement in this sector, and for us, it's important that we improve on our operating efficiencies, leveraging on digital, leveraging on all the ongoing reforms in customs, in infrastructural development. Albeit slow, but there is opportunity to operate with a lower cost base, and so we can deliver that benefit to consumers. Another lever that we're going to pull is distribution expansion and a well-executed route-to-market strategy, which ensures that we are able to reach our final consumers through appropriate channels that are available to them. You only buy what you see most of the time. And sometimes you don't go out looking for what is not available in your neighborhood. So expanding our distribution network would ensure that we're able to serve the underserved urban areas and some selected rural areas. And lastly, the last lever that we're going to pull, there are many of them, but I'm going to contain it to these 4 top levers to deliver profitable volume growth, is continuous investment behind our brands to ensure there is brand loyalty, there is mental and physical availability of our products. To achieve this growth objective, there is also a lot that still needs to happen. In the area of power, energy, it's going to be a great productivity unlock for the real sector if there is access to energy to power manufacturing capabilities. And what do I mean by this? It's not just the tariff that increases in the energy sector, it's consistent supply. In the not too distant past, we've witnessed erratic power supply and sometimes access to gas to power our equipment, come up with a lot of destruction and inconsistency in supply. And this is going to be a great unlock as we look forward to all the reforms happening in the energy sector. For habits, there are other options for the real sector to leverage on harnessing other sources of power to unlock the growth opportunities.
Thank you so much for that. Very well said. And I like the fact you talked lastly about the investment in the brand, and maybe that's also a good way to connect back to Danladi. So Danladi, you are the big boy here. You're the one we're after. We're after your cash. We want to know, where are the areas that you see for opportunity sector-wise, and what are your priorities for 2026 with the tightening of investment landscape globally?
Okay, thank you. First of all, it's an honor to be here. Thank you very much for inviting me. I always feel set up when I'm on a stage like this. First of all, let me just lay out the plan very, very briefly. So I'm in private equity. We're investing capital across different industry sectors. The last 10 years, frankly, in our industry have been brutal, to say it mildly, right? Today, most of the investors invest in private equity funds across the continent in Nigeria are the DFIs who have a developmental mandate. What's the reason? The industry has actually not done that well in the last 10 years. Investing US dollars in local currency generating assets has been very, very, very difficult. To give you a sense, one of the DFIs who has maybe 100 plus or minus funds in the portfolio maybe has 5 funds that are in carry. That is 5 funds alone that are delivering above 8% USD terms. I think none of us would accept that in our private portfolios to be happy with that. But that's the reality because of devaluation. So what we're seeing with the global investors is that they're pulling out of funds for the large part. The commercial investors have all disappeared because capital, as you know, is unsentimental. They can take their capital to India, to Vietnam, to Pakistan, to other parts of the world, and they make 2x, 3x returns. For a lot of funds across the continent here, right now, they're just asking managers to sell the businesses. They just want the capital back at whatever number they get. As a result, again, it's only the DFIs that are investing. Now, in local currency terms, however, fund managers have done quite well. They've exceeded, stock exchange type returns. They've exceeded government securities. So it's actually quite attractive in local currency terms. So as we're seeing foreign LPs retreat, and I actually think it's the wrong time to retreat because the 10 years before this, everyone had 2, 3, 4x returns in the overall portfolio. Last 10 years have been not great. The next 10 years I think will be much better. But the local investors are now filling the gap, right? And that's a really interesting change that's occurring in the last couple of months, driven by macro constraints, driven by regulations. Now, what they're interested in is yield, and private equity does not have as consistent yield, but it is very interesting that they're coming in and filling that gap. I think you'll see a lot more of that going forward. What are changes for us? There are actually no changes for us in terms of priorities, right? What's important for us is just continue doing what we've always been doing. Because we're private capital, we invest in maybe 0 to 4 businesses every year. 0 is important because in some years we don't make any investments at all. So we're really, really, really careful, or try to be. We're not investing in an index, so we're not investing in, the country. We're investing in a country, but we're not dependent on the overall macro. So the macro affects a lot. We're looking for the 1, 2, 3, 4 star performers that can completely outperform over a long period of time. And then we're not just giving capital, we're actually supporting these businesses in their growth. I think for us, So I think what's changing is that it's still the same opportunities that we're looking at. Can you hear me? Okay.
Yeah.
It's still the same opportunities that we're looking at, but the bar is a lot higher, right? The bar for selectivity is just a lot higher, because as an industry, we have to get back to just return. Problems. I need to put it in my mouth, maybe. So the sectors we're looking at primarily are focused on exceptions is non-discretionary sectors that are counter-cyclical, sectors where if there's devaluation, you can pass on price increases to your customer base, sectors that have maybe a natural FX hedge, right? That's what we're looking for. In terms of value creation, we are not operators of businesses. It's been even more important over the last couple of years to invest in the right operators, the right business leaders and founders. It's so critical. We can talk, if we look at across our portfolio, old adage comes through, which is it's better to invest in an A team in a B business than a B team in an A business, right? So the team is so critical. If you look at our best performing businesses, it's all about supporting the right investors. Going back to your question, which is like, what sectors are you looking at? You know, for me, it's very hard to answer that question. In general, when they say what are the best sectors to invest in, I believe the best sectors are dependent on your capability set, right? So we don't invest in upstream, for instance. My big brother here is doing upstream. There are tons of opportunities in upstream, but it's not within our capability set. We don't have ability to evaluate and check and know whether there'll be oil in a particular asset or not. We don't invest in commodities. But we think there's lots of opportunities there. Critical minerals is such a big topic now for many geographies around the world. Good earner, potentially good earner for Nigeria. We don't invest in that space. We think there's lots of opportunities in real estate as well, but we don't do real estate investments. So what do we focus on? Primarily consumer-facing businesses. That's what we've done for 17 years. We continue to make mistakes. We just hope that we'll not make the same mistake over and over again. We'll learn from our mistakes. But we just really focus on consumer-focused sectors. So we like healthcare, we like education, we like financial services, we like B2B type businesses.
Great, fantastic. Thank you so much, Daniel. It still sounds very promising listening to you, and I think to Wale, who's here, Equinix invested in Main One, was it 2 years now or 3 years ago? And it just tells the story of local investors also rising up to the occasion in some cases, but in other cases also that there is still attraction for local portfolio here. So I wanted to get your view on what could have inspired that as well, and what you see as the outlook for 2026 as you expand in your sector.
Thank you. I think this is better. Hello? Okay, better. Thank you very much. I think for the benefit of people here, maybe I'll quickly just give a short background about who Equinix is. Equinix is the digital infrastructure company of the world. It's the tech company that you really don't hear about because we're not consumer facing. We're B2B, we build digital infrastructure, which is data centers all over the world in over 270 locations globally. It has the largest ecosystem in the world, over 4,000 cloud providers, and 500,000 enterprises. I'm very sure many of you here, in some shape or form, you're dealing with Equinix. You may not just know it, because 95% of internet traffic actually passes through an Equinix facility. And even here, whatever digital devices you're using, I can bet that 90% of them is passing through one of our facilities. And in terms of trend, so Equinix has been around for years, an American company, expanded into Africa, which was by acquisition of Main One, as you said, and since then we've opened up a portfolio. The acquisition was about $320 million, and we have a expansion portfolio that's been announced as public space of $170 million in so far. As we speak, we're building 4 data centers, AI-ready data centers in Nigeria. 1 is ready, 2 more, 1 in Q1, and 1 more in the pipeline for next year. We also have a land bank. So in terms of long-term positioning, I would say our 25-year plan for Nigeria, because these are long-term businesses, is set. We're not a fly-by-night company, not a portfolio company. We're not going anywhere. Because infrastructure is foundational. So we always take a very long-term view. We're not, while we look at, it's important to see what's happening in 2026, what's happening in 2027, but the gestation period to build a data center is 18 to 24 months. So you can't be using a year-on-year assumption to take decisions. We don't take decisions based on that. Again, we have a very distributed portfolio. So we don't look at just a single country risk, or because Nigeria is going to have devaluation or inflation, we'll pull out of that place. No, we don't do that. Because we're also in America, and also if it's devaluing here, it's gaining somewhere else. There's always that kind of balance. In terms of tech trends, we are the center of, we like to say this is where the internet lives, okay? So AI has been a massive productivity enhancement tool. It's a tool, and I'm sure everybody here is using one form of AI or not. Even if you're not using it, enterprises are using it to deliver. What is happening is that AI is increasingly distributed. AI is not sitting in one place. It's sitting in one place when it's been trained, and that's what you see the big announcements around the world and go. But inferencing is beginning to take off. It's going to be a J-curve starting from maybe 2026 or 2027. We really believe it will be 2027 when the real curve will pick up for inferencing, which means they start deploying the AI trained models into enterprises. We're seeing it, the workloads are rising, and how do you know? Power consumption, all right? AI is distributed in nature because it lives on the edge, that's in your phone, then it goes to the core, the data center itself. Then it's also sovereign, it travels across borders. So there are several complexities that come with that. Data residency, legal, compliance, cost, etc. Where does your workload really live? So we need more shared understanding of exactly how does data move, how is it classified, and all that. So in terms of our priorities, it's very simple. We'll continue to build AI-ready infrastructure. Internally, we're moving from experimentation to deployment, where we have AI tools that we're using within our business already. So we are customer zero for AI deployment. We're already using it. I have it on my sidekick. We've changed many of our processes. I have AI companions, our bots and all that. And we're going to roll this out to our customers, to our enterprises, people who are within our ecosystem. If you are in our data center, you should be happy about that because you're going to have the ride of your life. Secondly, talent is an ongoing priority. The talent gap in managing technology is widening by the day because there are new complexities that need to be taken care of. And how many people have access to a live environment where these things are happening? So there's also talent. I would not say capital is not a problem, but we're very careful about the hype around AI. So we're not going with the hype. We're definitely staying away from training because those are one-time gigs. We're here for the long term, so we'll keep building solid technology that supports enterprises who want to use technology to drive their businesses. And I think if we look at 2026 back to Nigeria, the West African region, because we're operating in West Africa all the way, we think yes, it's good that there's stability. There's also good news that because if your customers are happy, then they can invest more in technology. I think where I see some more gap is actually the enterprise themselves. Many people still holding on to this quaint idea that they can run a technology stack from end to end by themselves with in-house experts. That's not going to happen, you know. So the earlier people start to realize that you go with professionals who can handle workloads, digital transformation, and get help, the better for you, because many digital transformation projects are failing because people want to go it themselves. It's a very complex journey, and we are like trusted advisors. What we want to do this year is be a little bit more engaged with discussing with the strategic and economic buyers of companies, because they're the ones who are taking strategic decisions. We don't want to talk to just the CIOs alone, because they just think it's a technology discussion. AI, digital transformation, is not a technology discussion. It's a strategic discussion. It's for the CEO and for the maybe CFO, okay? Yeah. Because it's a lot of money. I think I'll stop there.
Thank you so much, Wally. Thank you so much. And Sam, to you, there definitely are opportunities for intersectoral allegiance, if I may use that word. Where do you find these, and perhaps speak to some of the blurred lines that we're seeing in industries going into the future? Because you talked about the telescopic lens as well. So we'd like to get your thoughts from that angle.
I think the macroeconomic outlook is the starting point. I mean, listening to everyone here, the overwhelming sentiment is one of positivity. I think that things are beginning to look up. But going back to your question, Siri, the obvious intersectoral opportunities for collaboration are just right here. Falake started off by talking about what she needs to do, what her priorities are, and listening to her. Your energy priorities, your energy challenges are solved right here by Tony sitting next to you. If you think about that, there's already, if you see, that intersectoral play. The analyst does not invest in oil and gas yet. It might be the case that that will change, right? Tony is looking for investment with your very ambitious view around what Renaissance wants to do. So if you think about that, companies need energy companies need investment, all these companies need technology to be more efficient. So opportunities for collaboration already exist, and I think it's just about how the government uses that interplay between the private sector and the government to make sure that that environment continues to be positive and local. I just left them to do what they need to do to be more profitable.
Absolutely, spot on, Sam. Thank you so much. And with what you've shared, I'd like to also get some expertise, insights from the head of our advisory team across the West Market area, Femi Oshinubi. So Femi, if you could just spend some 3 minutes. I don't know if you would like to sit there or you come closer to us for comfort. Be near us, we like you. Yes? To just share some perspectives on what we're seeing from a technology and digital standpoint as we see that to be strategic enablers for businesses going into the future.
Yeah.
Anna.
Good morning, everyone, and thanks, Siri, and the panelists and everyone. Good morning to you all. I think Wally's done most of the job. When they started talking, I said, "Oh wow, this man has seen some of the points I wanted to really." But you did a good job, very well. Thank you so much, and hopefully, probably we should be partnering together because we're on the same journey. But a couple of things that we're beginning to see. I think when you come to globally. And we've done a lot of surveys in the last, our 2025 survey showed there's really no discussion these days without talking about tech, data, and AI. So a couple of things that through our survey that CEOs are doubling down on, and some of the big bets, one is tech, data, and AI, one is actually reinventing. So we see organizations looking into reinventing themselves. You can't be the same way the way you were last year or 2 years ago. Otherwise, you're going to be like a Kodak of the past. And the third thing is around cybersecurity. So there are risks even around tech, data, and AI. You've got to really secure yourself. So some of the stats I will give you around what CEOs are saying around AI, especially when it comes to revenue gains or cost efficiency. Only 30% are seeing the gains at the moment, but we still need to invest. So, but there's going to be shifting focus from pilots. So a lot of the AI use cases are pilots. People are still scared. But this year we're going to see more of enterprise-wide integration. And you know, a lot of companies will start positioning themselves to outperform peers as the AI value deepens. Again, around cybersecurity, trust is a new currency. Companies with the fewest trust concerns will deliver total shareholder returns. And last year, there was about 9% shareholder returns, higher than those with high concerns. So if you can really ring-fence yourself, ring-fence your organization, technology, then we've seen a lot of shareholder returns from that. And again, around the reinvention, that will continue to happen, and we're going to see a lot of big companies globally, and even in Africa, beginning to see high returns from that. Let me focus on 3 technology trends that we believe will shape 2026. AI is a big one, and that will keep becoming very critical. You will see most companies. One of my clients actually just appointed, is actually an African company, probably one of the biggest in Africa. They just appointed a group CIO, and the focus is really to drive their AI agenda across 17 countries in Africa. It's happened in one of the countries, and they've seen a lot of growth where the person was the CIO, still the CIO until next week, and they just made an announcement to now say, okay, what you've done in this particular country, roll it out across all the 17 countries. So even people are looking at the CIO of the future now. If you cannot drive the AI agenda, the expectation from the CIO of the future is not about being operational, keeping the lights on. It's about actually enabling the business to generate more value. So those are the CIOs of the future, and we're beginning to see that happening across a lot of big companies. And big people are beginning to see set up AI investment committee or AI implementation committee across. And we've seen traction around the board level where they are now forming AI board governance committee. Some of the advice we give to some of them, if you're not big enough, why don't you embed AI governance committee into your risk and control committee? So people are taking different, but it's actually a board level conversation where you have people that really understand AI sitting at the board level and helping make those decisions, because it's a board level conversation for adoption. The same way where 75% of organizations actually struggle with adoption of enterprise applications and enterprise systems, we're beginning to see that almost 90% struggle with adoption. So we're taking it to the board level for adoption. Some of the trends, again, which Wale spoke about earlier, is around sovereignty. You see most companies, governments, and regions are redesigning their data sovereignty and IT management policies just to ensure independence and non-interference for major technology companies. So you've got to, and a lot of countries are bringing out all this NDPR policy, EU DPR policy, just to make sure that you can protect data. And the last one, which I actually mentioned around the trend we're seeing, is cybersecurity. It's going to take a principal role in ensuring protection from the increasing use of data. One final thing I want to mention before I leave the stage is actually some of the quotes that we have from one quote around AI. It's actually in the launch of the Outlook we're going to have today, and it's actually on Nigeria. Our survey shows that Nigeria CEOs are applying AI in defined use cases, particularly across customer-facing functions, products and services, and selected internal processes. As AI use expands, concerns around data integrity, cyber resilience, and responsible deployment are becoming even more critical for businesses. So the priority for CIOs is to ensure AI adoption is supported by strong governance, cybersecurity controls, and clear accountability. So innovation supports performance and trust rather than introducing new risk. Thank you.
Thank you so much, Femi, for doing that in a very short time. We're going to move over now to the next discussion, which Femi has introduced on technology and digital. So there is a notable book that I've been reading by Bob Johansen. It's on the future. And one of the things he talks about is he's a futurist with the International Institute of the Future. And what they typically do is do a future-back thinking, where they go like 20 years in time to see what the future might look like, and then scale down to what signals we're seeing, and then ask the question about what you need to do differently now for the future. I'm sure this is something that all the CEOs here have on their minds. So I'd like to kind of take this discussion to the way of AI. As Femi has said, there's a lot of value and shareholder return that's coming from there. What are you doing now, and what are you seeing for the future in terms of your strategy? Maybe I'll start off with you, Tony, and we just make the round across the room. 2 minutes, feedback.
Excuse me. I think the constant is that AI is here to stay. It's very difficult to not be awake to it. I personally was woken up to that reality by my daughter, and we were having a serious conversation about something, and I was espousing my knowledge, experience, and perceived superiority, and she, in 5 seconds, said, "But Dad, this is the reality." And I'm saying, "Where did you get that? How did you know that?" I said, "Just ask ChatGPT." And I said, "Who is that?" That was when she really said to me, "I see you are fast becoming an IT illiterate." And I woke up to it. That day, she set up my app, she showed me what to do. And I said, "Wait, I do a lot of speeches. Can it write speech for me? What do you want to talk about?" Literally, 5 seconds, it's there. Of course, you still have to do some things. But I think from my industry, I'm very, very optimistic. If anything, super excited to the extent that my IT lady is saying, "Slow down, slow down." And I'll say it from the standpoint of data interpretation. Everything we are producing today has come as a result of seismic interpretations. We have petabytes of data. And if you think about it, the early sectoral progress that was made, which was revolutionary in the 70s and 80s, was based on 2D seismic interpretations. And on the back of 2D seismic interpretations, most of the developments in the Niger Delta were made. But then comes 3D, and everybody was so excited. We went back and reinterpreted quite a few fields and reserves based on 3D, and there were surprises. And one of those surprises is to the extent that a lot of the fields that were predicted to have died 20 years ago are still producing. And then someone tells me about what AI can do, and you expect that I won't be excited, because in my mind, the same progress that we got reinterpreting 2D based on 3D superior technology, I believe that if AI comes into my space and I'm able to go back and reinterpret the existing fields today, some fields that were even set for abandonment, you will be surprised as to how much within the limits of technology of the past we have bypassed. To that extent, you will actually find that you don't need new developments. I have over 300 wells that are earmarked for abandonment. Can you imagine a scenario where I deploy AI and I can see clearly? All I need to do is go back into those wells, sidetrack, and I'm back again. That is the first value that I see. But beyond that, AI, for me, is around the speed of decision, the value add, narrowing time to that decision, and ultimately, this is the place to be. But of course, you have to be conscious of the flip side around data security, cyber security, and what controls I have to put in place. As we speak, we're going to board in March, and we are taking what would be perhaps a first, at least within our company, an AI policy, because you need to put guidelines. And one of the risks that I worry about is people who are running my business using OpenAI data, ChatGPT. All that needs to happen is someone in Malaysia, very far off, just says, "Can you tell me Renaissance this and that?" So that competitive edge that ordinarily I would have preserved, because as machine learning and AI has interacted with my company that much, that information is open. Yeah. So I've also got to find a way to preserve my competitive edge while taking advantage of what AI can do for us.
I wonder if there's any role that regulation can also play in that angle, and whether you've given thought to some of the regulation that we may need locally?
It's imagined in our world, and it's not something that I know a lot about. You can tell from the interaction I've had with my daughter, but I can almost sense that it's going to be dealt with almost like how crypto has emerged. You can try to regulate as much as you like, But as long as it's open, it's available, you can set your boundaries, but I can tell you it will be limited how much regulation will play. In the end, it will behove on corporations to set their own boundaries and hope that they can get compliance to stay safe while trying to extract the maximum value. That would be my thought.
Thank you. And Wally, do you want to chime on that as well?
Yes, definitely want to chime in. Yeah, definitely want to chime in. So let me start with the regulation part. Data flows from everywhere. I will give you two things. So first, I like that example you used about petabytes of data. There's a company we know, one of the companies in our enterprise. What do they do for oil companies? They scan, there are a lot of data that comes from scanning your pipelines for faults and blah, blah, blah. It used to take months, to analyze that data that comes because you have to scan the pipe, hundreds and thousands of kilometers of pipelines, not just longitudinally, but also around the circumference, and in 1 millimeter, whatever, bytes. So it's a huge amount of data that analysts will look at and they will now predict. It's done in seconds now because they have the AI tool to do it. So you can see the massive productivity there. So the data privacy issues. Regulation is typically looking at data privacy issues. Personally, I think yesterday was even International Data Privacy Day. So there are data privacy issues that you need to look at first, personal data, etc. Then you talk about cybersecurity. How do you protect your information, your critical business information, the way you talked about? Then there's also sovereign data. You don't want your defense information going out to everywhere. So there are rules now coming up, of course, the NDPR in Nigeria, fashioned after the ones in Europe and America, in different shapes or form is still a little bit here and there. But I'll tell you that AI is distributed in nature. So you cannot ring fence everything. What we need and what is happening now is proper regulation around data classification. What can move across border? What do you need to be resident in your country? And if we don't have the power, for example, AI is power hungry. And AI data center needs a nuclear power plant to power it. We don't have the money, we don't have the skill. So you cannot say you won't be part of the race because you want to keep that. So there are different models. For example, I think it's Iceland, Finland, or some of all those. They just partnered with OpenAI, gave them the data, put some framework and say, okay, use this to train your machine and give it back to us. I think that's the way we are going to go eventually, because if you win in AI, you win permanently. And if you lose, you are out of the game. So our LLMs, African LLMs, a lot of work is going on around there, and there's a lot of discussion between
LLM? Don't tell us what's going on.
So the ChatGPT and all those, they are large language models. So basically they speak, so to put it in layman terms, this machine can speak all the languages in the world, has read all the books and memorized them. So when you ask it can tell you X, Y, Z. So that's why it's called large language.
Large language machines, got it.
Do you want to add anything, the other panelists, before we get some insights from our regulatory team? Yeah?
Yes.
Yes, I think I'm a little addicted to ChatGPT now. Even recipes for new soups. But it's in my sector, it's a great tool to enhance productivity, and it helps us to make better and faster decisions. And it's helping also to shift away from reactive management to more proactive, execution-led management, leveraging on the AI and predictive analytics. It helps with supply planning, it helps with demand planning, it helps with production scheduling, and the large amount of data and analysis it does also help us to be proactive when consumer preferences or consumer behavior starts to change. So we have moved away from those days where you need to do your promotion, analyze your data, look at your trade spend, and then you find out, looks like consumer preferences have moved from what we are offering. Now, you are more proactive because with AI, you can see where market is shifting to and you can adapt to these shifting preferences. It also helps a lot in managing costs because you have good visibility into your inventory, you know what is moving slowly in trade, you know how to move things around. So with AI, it's a lot of possibilities that it has unlocked. Now coming to the issue of the risk associated with AI. For companies that operate in the risk sector, I think it's important to have a disciplined approach to the adoption of AI. And we continue to look into how to protect especially commercially sensitive information that will hurt the business through adoption of AI. There's a lot that still needs to happen in the area of governance, data protection, and all of that. But where we are now, adoption of AI has improved productivity and supporting organizations to be more nimble, more efficient, and helping protecting their money.
Thank you. Dala, you wanted to say something? Is he on? Okay.
Hello. Okay, so I wanted to add in really quickly. We've spoken a lot about how AI I think in two different ways affecting companies. One is on the revenue side, creating new revenues. Second is cost and efficiencies, right? But if I also, in addition to that, I think from a private equity standpoint, two other things are important, right? Which is what new businesses, and I think you touched on that earlier, what new business models, what new businesses are being created by AI/technology that we should be thinking about. And we spend a lot of time just thinking about that piece, right? If we'd had the foresight about what data centers would do, would have put money into data centers many years ago and we're smiling like you today, right? If we think of the growth, and again, just think of technology, the growth of, fintechs, right? And if we'd seen that in the past, they're not just VC investments, we're seeing the likes of MoneyPoint raising $200 million. It's gone past VC, past PE, I don't know what it is. It will be listed soon, right? So we spend a lot of time thinking about what are those businesses that don't exist today or are very small today that could become giants in the future. On the flip side as well, which companies will be disintermediated very, very quickly and will cease to exist. So a few years ago, we invested in a BPO, a call center. We've got 17,000 young Africans across the continent in 15 different countries answering phone calls. If you read most of the studies, that's one of the first industries that's probably going to go completely because of AI. So the question for us is, how can we stay ahead of that curve? And rather than serve the same customer base with 90% fewer employees, can we 10x the revenues with the same number of employees? We spend a lot of time thinking about that. Invested in tomorrow technology, the telco tower business. Some of the things I read about Elon Musk and his satellites up in space, and eventually one day they'll become an MNO, and you may not need towers. Is that the next 3 years? Is that the next 5 years? Is that the next 7 years? I'd love to get your take on this afterwards. But so I like to say, and I tell sort of the CEOs that we partner with, where I'm not an expert in any business. I'm not close to the businesses. I'm just a paranoid person by nature, so the more paranoid they are about their businesses and what technology can do to their business, the more comfortable I feel, right? Because I don't know where the threat is, I don't have sector expertise or deep sector expertise, but I want individuals always worried, always thinking about the impact of technologies. Again, not just the upside, but particularly the downside is perhaps even more important sometimes.
Thank you so much, Danladi. And as you were speaking, I was actually thinking of other industries like even media as well. Some of what we're seeing is there is also threats at the lower level where you can then say AI has taken over in terms of maybe the print of our newspapers. We no longer need all of that. We probably want to stream online. So I like the fact that Frank showed us that QR code. But there's also that thin line between I still need experienced minds, those that have walked this path, in addition with this AI knowledge to be able to scale. So I wonder if any of us are seeing any sectoral differences that suggest that we still need these experienced hires. We may not longer need lower level staff, and they definitely need to now turn their skill sets into AI as we scale into the future. I don't know, again, no one has the crystal ball, but truth be told, no one has the answers here, and we do have to value create real time and be agile enough. And I don't know if Sam wants to add something here around some of the sectoral differences and just the opportunities to scale, because it's important now when you think about what's happening globally.
I think what you mentioned, that if you miss out now, then you miss out permanently. And I think it's good to be flexible and to start right now. The time to start investing in AI maybe was 2-3 years ago. The best time to start, the second best time to start is today. So as soon as you step out of here, you need to start thinking about it. IT, tech, and digital is no longer a back office expense. It is now a key critical strategic differentiator. If you're not investing, IT is what's going to make the difference with respect to your strategy, whether it's about customer engagement, efficiency, or as Danladi has even mentioned, even new markets. So CEOs have to invest time, energy, and resources in developing their tech and data capabilities. The approach to it, you should be challenging you. What I do at PwC, for instance, is there's no conversation we have that we do not ask the question, how can we use tech and data to do this better? You want to recruit 5 new managers in your unit to add to the 10 you have. You have to first demonstrate that the 10 have the tech capabilities required to do the workload of 15. So you have to continually challenge everyone, marketing, finance, operations, engineering, as to what level of digitization, tech enablement have you deployed to make you competitive. And that is the way to start. So start wherever you are. There are different industries will have different capabilities. You'll find that the need for Equinix will probably be at a much higher level, or maybe private equity. For wherever you are, AI and tech is here to stay. The question is not whether your business will be disrupted by AI, because it will be. The question is the impact of that disruption. So you've got to be ready for that.
Thank you so much, Sam. And on that note, I'd like to introduce or welcome to the stage Chijioke Waibute, who is the head of our tax and legal practice, quickly, to just share some insights on the regulatory landscape. If you can touch on AI, data privacy, you can also talk about it. Tell us. Go ahead, Chijioke.
Good morning, everyone. So, I was given only 3 minutes to talk, and you're now adding.
So the timer is going to start, yeah?
Yeah, start.
All right.
I've been given only 3 minutes to talk, right? And I guess the question is, why do we allocate so little time to tax? That's the question. Why do we allocate so little time to tax? And that's the question you need to be asking yourself as a CEO today. How much time am I allocating to tax and tax issues? Considering the fact that it's become the biggest conversation in Nigeria. Everybody's a tax consultant in Nigeria now. Everybody has an idea of what tax is. I was in a meeting last week and, with the tax implementation committee set up. And I said, the good thing about what you guys have done is what? Everybody is now aware of tax. But as a CEO,
tax is really the difference between value creation for your shareholders and value erosion. So what do you need to do today? We've heard all the noise about the new tax law and the different versions and everything. A lot of noise in the environment. But what we need to do as CEOs is say, what is the version that we're looking at today? The version we're looking at today is the version released by the House of Reps. There is time, obviously, to fix that version in a manner that is acceptable to everyone. So advocacy becomes a big conversation for you as a CEO. You need to get involved. The changes that will be made, engage your tax advisors, engage your internal tax team as well to say, this version that's out there, what's the implication for us? There's an opportunity to potentially change it. Can we contribute our voice to the conversation? So that's the first thing I'd say. The second thing is, the version we have also speaks to what? Significant changes in compliance, use of technology, and I like the fact we've talked about AI and the rest. But be careful, before AI creates a bigger tax liability for you. You still need the human experience, you still need people to understand the laws and apply the laws. Huh?
AI hallucination.
So when you start hallucinating, so you also have to be careful. But I think more importantly for you is risk and compliance, because the penalties are very high. And the whole idea was what? To act as a deterrent to non-compliance. So your tax policy, your tax risk management framework becomes critical. In fact, most of the work I'm doing now for big corporates is what? Taking another look at their tax risk management framework. Because everybody now understands that, look, this is a big issue for us. So risk, compliance, and the use of technology. And I'd say the third one is the decision making you make. So for CEOs now, it's all about what is our plan for the year, where are we making our investment plans, our divestment plans, our expansion plans as well. Looking at it from a tax perspective, I worked in a big corporate where I'm an afterthought. I literally had to force myself to the table. Tax is not a C-suite conversation. So when you're taking those decisions around, I'm expanding into a new market, looking at restructuring my business, you need to have a tax conversation around the implications for you and your business. Now, the last thing I'd say, because I know that I also do have other regulations, because again, Marilyn, who is here, who is our sustainability partner, said she'll kill me if I don't talk about sustainability. And I'm sure it's here as well. So from a sustainability standpoint as well, we need to start thinking about the reporting requirements, especially for IFRS S1 and S2. I see heads nodding. Some of you have already gotten into the voluntary stage, but 2028 is not that far away, because there's a lot of work you need to do in terms of your preparation. There's a lot of data you're going to have to gather. There's a lot of capability building, and it also fits into your strategy. So as CEOs as well, we need to start thinking about how ready are we for the reporting requirement, especially as PIEs as well. So I'm just going to end with this to say, tax is here to stay.
Brace yourselves.
Make it a C-suite conversation. Thank you.
Okay. Thank you. All right, so we've looked at data privacy, we've looked at taxes, we've talked about sustainability, the CEOs here. This is something I believe is on your agenda in terms of risk and compliance and strategy across the groups that you operated. Maybe starting with the oil and gas industry, you guys have one of the biggest tax rates, 85%. Which usually cuts away most of what it is that you produce in the ground. On top of that, there are royalties as well that still need to be had. So it'll be interesting to get your thoughts in terms of your strategy going into the new tax landscape, but also what you see for the future. Is there anything that's missing regulatory-wise that we need to think deeply about as a country?
Okay, for that clarity. That's the reason why I said we are side by side with PwC. I think one of the strongest chokeholds is this tax front, because it's an area you need to understand
This industry is very interesting. If you look from outside in, you will probably assume that it's just the PPT tax. It's unbelievable how many taxes we're dealing with. Whatever you call them, they're still taxes. There's education tax, 2%. There's NDDC tax, it's 3% of your annual budget, whether you deliver that budget or not. There is this 85% you talked about, depending on if you've converted from the PIA or not. There are all sorts of taxes in the industry. Ballpark, you begin to ask yourself, how come is this profitable? I don't know. But what it speaks to is the fact that you have to just be sharper in understanding these taxes. And I think with this reform, the biggest strategy on our side is really, do we even understand what this change is about? And are there inherent opportunities within the change and the transformation that is coming? I had a personal hit. I mean, at some point you're working, you say, oh, I'm a consultant. And they say, we're working that out. Yeah, consultants, just pay your 10% withholding tax, walk away. Hey, I'm a retiree, I don't need to pay. Then they interpret the law and say, you're owing 1 year tax in arrears. At a point, my wife was even saying to me, can you do the maths and let's confirm if it's worth continuing to do this work or not. You're going to get into that space where tax is the main conversation. It's no longer the back-end conversation, it's the starting conversation. What is the tax implication of what we're trying to do upfront? And if you see that relative to the value that will be eroded or added, you make a call whether the investment is worth it at all. And I can say the big investors out there, maybe somebody here is very well ingrained on what is going on. Now looking from outside in to say, we need to understand what is changing there. And that is going to be a very big part of the fundamentals that will drive whether investors will come or not. I mean, I hear people speak to it, but just getting it right is even a problem. One is gazetted is 30%, another is not, is 15%. Somebody's saying this, we just need to get it right, and then the rest of the sectors can analyze the impact and implications to themselves. But from a strategic point of view at Renaissance, we just want to understand what it is. And then we can begin to factor how to deal with it or how not to. And I think that's the starting point for us.
Yeah.
But it's a big deal.
Thank you, Mr. T. And Dana, last year, December, there was a huge shock on the stock exchange with significant loss because of the capital gains tax, trillions of naira actually. Where do you see this playing out? What more certainty or assurance is required by the government for investors to be able to leave their capital in Nigeria?
Thank you. Just as Tony just said, I think the biggest issue is actually the uncertainty. Investors want to price their returns and know whether to bring the money in or out. If there's uncertainty and I feel like the policy may change again, they'll just hold back. Because again, capital is unemotional, right? That's the biggest issue. The second, of course, is the quantum as well. Again, I've just mentioned earlier on about how returns have been depressed in these markets. So the only thing that we've done now is we've baked into the additional capital gains into our returns, which is probably resulting in a lower offer price for businesses because you have to generate those returns.
Yeah.
And overall, we have to think of what does the country need most. We need to encourage businesses. We need to generate we need private sector growth, right? We need to attract more capital. I suspect if the capital gains tax was much lower, we'd have far more capital coming in, creating these jobs, and also the government's like to get more money back. We're not, yes, the capital gains tax is much higher in some other countries, very few with some. Denmark, I understand, about 43%. But Denmark, your children walk to school 100 meters down the road from you, right? There's lights everywhere, there's free medical care, you're paying 43% of capital gains as taxes, but it comes back in terms of societal value.
Thank you so much. Folake said, I must talk about this Nigeria Tax Act when we were preparing. She said, I hope Taiwo is not going to be there. Taiwo is not here, but he will be here later. Please, go on, shoot.
Indeed, tax has become a topical issue. It's crept into the boardroom, and it keeps us awake at night. And For us, it's important that we manage the risk effectively and work with experts. So we are doing our health check. We're proactively planning. Abe, I think with the ongoing reform, there is also opportunity to have more clarity and to simplify the entire process, and continue to avoid the area of multiplicity, reversal sometimes, and retrospective enforcement when new tax comes up. But otherwise, for the real sector, we are not new to changes, and improving and harmonizing all the different layers of taxes even makes it better and easier to comply. For us, in Cadbury, compliance cannot be 99%. It is 100% compliant, being a responsible organization. And we continue to work with experts like PwC and those who support us to ensure that all blind spots are adequately assessed and risk is adequately managed.
Thank you so much for that, Ken. And Wale, maybe you can speak to tax definitely, but I'm particular about tech and the growth of that for the future, because you've laid a solid ground for how we should scale. So I missed all of these downsides with tax. If at all there are uncertainties still, there's still the opportunity to scale with AI and technology. So I'd like to just hear from you what kind of regulatory upsides you think may be missing that we need to focus on strategically, and if that is something we could do collaboratively with the public sector to make sure that we get all of those benefits that we're speaking to here.
So, on tax, I think first, I would say the technology part of the tax is that your internal workflows have to be updated, because we all use tools. You have Salesforce, you've got accounting packages, you've got all that. Have you optimized them? Have you baked in a new process? Or are you just, okay, because I have SAP from 10 years ago, you continue using them? So I think this is where AI again comes in. If you have a team, and this is where you work with trusted partners, your lead to cash, your book to bill, all those internal processes have to be rejigged so that the nuances, so that it can also learn. Because the thing about AI is that it's learning faster than everybody else. I think just to quickly say something about AI again, I don't want to overflog it, but this idea, AI is going to replace you, AI is going to do that. First and foremost, AI is an intern. You have like 2,000 interns. Intelligence is not wisdom. You will still need wisdom. It can optimize every metric, but which metric do you want to lead with? Every leader will have AI. Every enterprise is going to have AI. So there will be no best practice. I know this doesn't know that. Best practices get wiped out at the end of every day, okay? What will not be common is the human edge. So we are moving, we have IQ, then EQ. We are now in AQ, adaptability quotient. How do you learn, relearn, and learn again? So that, bringing it back to this whole tax cycle, is how quickly can you adapt your systems to take in all these nuances and learn so that you don't get exposed. Those are the internal things. From a regulatory perspective, I would say for tech, you can't regulate tech per se, because tech is innovation. But what you do, what I think would really be good is have regulatory sandboxes, safe areas for innovation. You have a young country, 19 years old, median age. So the average Nigerian is in this room, okay? Yes, they're out there.
Some people feel they're younger. Why are you exposing us?
You're not 17, you're not the average Nigerian. But so there's a lot of innovation, but it doesn't get to scale because they all die in a brutal incubation period. You know how businesses can be at the beginning. What would be really nice would be regulatory sandboxes. I remember what happened to crypto. we kind of went with the sledgehammer on it. But meanwhile, you can't stop. It's blockchain technology. It's here, and it can be used for land allocation. It can be used to solve so many problems. We have people who are using it to solve inter-African trade, financial payment issues today, partnering with the big global banks. So it's the same thing with innovation. We have innovation. How many companies have a chief innovation officer internally? That you have problems, these issues you're talking about, CEOs now. There are people with the solution somewhere there, but it's still raw. How do you make sure that you bring it into the organization? Not leave it in one department, because you never pay attention to it. You pay attention to revenue. You have to bring it into the company, but let it run on its own. And so I think where collaboration comes, and we do a lot of collaboration, by the way, is getting innovation embedded into companies and allowing it to run, because we fail a lot. But if you make it a department and they repeat, by the time they come to ESCO 2-3 times, they say, okay, we are killing it, because it's just a department. I think some of these mindset shifts about how to lead in the age of AI is going to be very critical, both for regulators and for practitioners, management practitioners.
Thank you so much, Wale. And Sam, just to close this segment, we've talked about PPPs. We looked at the budget earlier. We saw the differences when we compared across countries. Frank spoke earlier about the need to increase our revenue at the top. What would you add to that in terms of moving us now from just a paper document, which is called our budget, into a true playbook for the private sector and the public sector?
Every single person here is accountable. I mean, the CEOs here, you're accountable to your board, you're accountable to investors, you're accountable to shareholders. The government has to mirror that same accountability. The biggest problem with tax and the regulatory environment has always been transparency, predictability, accountability. So for this to work for Nigeria, for that playbook to be successful, the government has to act the way CEOs act. You have to act, if you ask for taxes, you've got to create the environment that make people trust that your example about Denmark is quite interesting. That is what taxpayers are looking for. So for you to demand more revenue, you've got to provide accountability. We're talking about innovation, talking about expanding to new markets, doing new things. The government's role is significant in creating the environment of trust that enables us, for instance, many CEOs are survey to us so that 56% of Nigerian CEOs are apprehensive about expanding outside of Nigeria. The government has a role to play, using AFTCA as an instrument, as a lever for generating growth and generating expansion. So it's not just about growing top-line revenue, it's also building the infrastructure and creating the trust environment that makes investors willing to participate and making entrepreneurs happy to participate in that process.
Thank you so much, Sam. And on this note, I'd like to bring our insights from Kunle Amida, who is our head of deal advisory. The money guys, you and Danladi, you have impact. Tell us, 3 minutes.
Yeah, thank you very much. Good morning, everyone. And I think I will have to on the point Danladi made around valuation, which is challenging. We started saying it, but in 2026, for transactions really, you have two partners. You have the buyer, you have the seller. The buyers are objective to buy at the cheapest price, and the seller has an objective to sell at the highest price. So there's a balancing act that will probably play out in this 2026 model, especially as it relates to this issue of taxes. So that flexibility needs to be taken on board. I think another thing that we believe will play out in 2026 is around access to local capital. We've seen the bank recapitalization exercises. I think the deadline is this year. We have the insurance as well. There will be more sophisticated products that will be developed to be able to deploy
that capital. Also, Shegun mentioned that exchange rate, interest rates will not reduce as we expect, but we believe that lower interest rates combined with the increased capitalization of our banks will provide the much needed access. Because as international money possibly if it retreats for whatever reason, that availability of the local alternative will be great. The third one for us is around value creation and realization. This is very, very important for companies. There's an area that we're focusing on, which is what we call transact to transform. And what that means is that as a business, how well do you look at every aspect of your business to know what it is that you can let go of for you to be able to take advantage of other things that takes you to the next level. So when you look at your business diligently and you are able to do certain types of transaction, it may be a very quick way for you to transform your business. And in terms of value creation as well, it is no longer going to be financial and tax review of companies when you want to do acquisitions. We are now seeing increasingly what we call business diligence, where you are not just diligencing the numbers, you are now diligencing the business model, you are diligencing the value chain, you are diligencing different aspects of the organization, such that when you go into those businesses, you are going in with very full knowledge and appreciation of how value is created. And in terms of attractiveness, we believe the energy sector, financial services, and impact-oriented businesses will now play a very significant role in 2026. The IOC divestments, they've not finished. There will be a bit more that will be completed hopefully this year. That will continue. In addition to that, we believe the marginal field bid rounds that is ongoing will probably bring some more assets that can be financed into the market. And more importantly, as banks, as we approach the deadlines for the bank capitalization, the insurance company recapitalization, the expectation is that there will be some last-minute deals that will be done, especially for those that still have shortfalls. Those are opportunities for us, for companies, to CEOs, if that is within your remit, to take advantage of. And more importantly, we are, I think, in the survey. What we see is that the expectation for the economy is quite bright in 2026. And the activities we are seeing on the deal side is that the interest in Nigeria is a lot higher. I tell people for like 10 years, there's a major global private equity firm that I've worked with, I used to work with a lot. And for like 8-10 years, they never called us for transactions. In the last 2 years, they've called us almost 3 times. We're doing the 4th stuff with them now, that they're evaluating stuff. So the activities are picking up. Before, when you send transaction teasers to people, what you get back is, oh, just leave it, we don't even know what the exchange rate will be, all of that. I think those things are behind us now. The outlook, we believe, is good. If we can keep sustaining what we have, I think those possibly the portfolio investment that we have will come back, especially for us when we start receiving interest from certain parts of the world where we usually do not. We believe we are on the right track as a country, and we're seeing a lot of those activities. We're doing a lot of work to ensure that we can enable those investments. And I think, as we discussed, the point for every one of us is to, if we are going to be buyers in the market, how do we strengthen our internal processes to be able to identify the right businesses to buy? If we are going to be sellers in the market, how do we organize our affairs such that when the right suitors come, our business is well set up to deliver the valuation that we expect? Thank you very much.
Thank you so much, Kunle. And I'll just ask the panelists if anyone has a reaction.
Hello. Okay, yes, I do. Thank you. Thanks for those words. If I may just echo, I agree completely. Sentiment has definitely changed, right? I think where some of us are still cautious, but we're more optimistic than we've been for the last 10 years. Actually, extremely optimistic. We're seeing real changes. There is more investor interest. Investors will come slowly, because again, they've been beaten, but they are coming. And the changes are quite evident in terms of the macros, right? We saw the growth numbers, inflation has come down significantly. Currency strengthening, we've not had that before, giving business a lot of confidence. Like the chairman of Business Day said though, it's not yet trickled down, but that will certainly come. So I think there's just a lot of optimism. I know, even on this stage, we were all speaking about some things in the tax laws that we did not necessarily like. But the fact is, reform across government has been largely positive on the monetary side, across different industries, and even the tax reforms are very welcome. They're very necessary, right? Yes, there's some confusion over the last few weeks, and some of us would like some numbers lower rather than higher. But I think everything directionally is giving confidence, and that just makes us feel quite optimistic that the future is bright for this country.
Thank you so much, Danladi. And as we close the panel, I thought to do this differently. I want some of us to be magicians, to give us some insight into the future. But I'll leave the pressure behind for some of us that can pick right. And then you just have to say one word. So if you pick a paper that says you're going to be the magician, sorry. One, Mr. T. So just read out what you have, and then you give us the answer. Let's start with you, Folake.
2026 outlook. Single word.
Single word.
Resilience.
Resilience. A round of applause for Folake. Mr. T. Okay.
Hopeful.
Hopeful. A round of applause, Mr. T. Daladi. You're the magician. Yes?
What magicians supposed to do again?
What's the question there? What does the topic say?
Oh, it says change, repeal.
Yeah, what acts would you change or repeal for a better economic outlook in Nigeria?
Some of them are.
Your team goes.
I can help him. So what we have today is, in this industry, we have the PIA. It took 20 years plus to eventually have it, and as Danladi said, investors don't like uncertainty. With the PIA came some relative certainty, but when you look at the PIA that came 20 years late and signed off, there's so many things that are not in order. But the government is trying to correct that, because you need an act of parliament to update the PIA. So government is using executive orders. So the excitement you're feeling in this industry today is actually coming from those executive orders. But one particular one is not in place yet. They've opened up so much, but in the Nigerian content space, nothing was done. So you have what looks like an hourglass. Something's improved here, there's still a choke. There's one thing that we would like there is to align the NCDMB Act to these executive orders that you are very involved with, you know how.
Thank you, Mr. T.
Okay, thank you. So maybe the change I'd make would be the ways some of these policies come about, right? And maybe we need more sort of clearly defined ways for stakeholder consultation, how long that happens, far more transparency into the impact assessment of some of these rules. Maybe once rules are made, they should stay for 5, 10 years, whatever it may be, so there's consistency. So it's more the process by which these changes happen. Maybe, how they get from executive orders into law, because then investors know it's baked in, because an executive order is great, but investors says, what if the next president or the next administration changes it again? So getting it into law is really important. So just everything, again, has to go back to sort of transparency and consistency.
I like that. And I like the fact that Business Day is our partner, so that would be in front page, hopefully.
Please no.
Wale, please. Wale.
confidence level that Nigeria turns the corner this year on a scale of 1 to 10?
Yeah.
I would say 7.
And why?
Because we're doing the right things, and from a tech point, we had always kind of projected that from 2027 we'll start seeing the uptick in the inferencing. More and more people will be using it. I mean, everybody is using ChatGPT now, and if you use ChatGPT this time last year, it was not speaking pidgin, but now you can speak pidgin. Yeah, you can ask it about Eva and all those ones, I will tell you. Because more and more people are putting it inside, you know? He knows slangs, Nigerian slangs. But I want to poke into his question, you know, about what we need to repeal, just in the tech space, okay? We always look at the supply side. Oh, build more data centers, so this, that. How many people are going to use it? How many enterprises here are using the data centers? How many people are going beyond the basic? You're using free ChatGPT. You're probably even using it to run your company. You don't know you should create your own internally, etc., etc. There is a physical layer that powers the internet. The internet is not, because you are using a mobile phone, does not mean that something did not bring it there. We have subsea cables that are under the Atlantic, 8 of them in our shores here. Right? Then they have physical cable fiber running to each point, to this hotel, before you have a point that distributes it wirelessly. Typically, because we don't see the internet the way you see electricity cables, we think that it's just somewhere there. So that your point about Elon Musk is not going to happen. It's a law of physics, okay? It's not going to happen. Your tower will still need it. So, but a regulation that, so it's construction business. Basically, it's building for, and one thing that's missing today, and I'm saying it, maybe someone can help, is that our building codes are colonial codes. They've never been revised. So, you know, if you're building something today, you show your electrical plan, you will be signed and approved. But there's no digital plan there. You can build a whole estate and not put a digital plan, and it will be approved. Digital infrastructure is a fundamental human right. It shouldn't be something that's an afterthought. We moved into houses, then you start putting your LAN cable. We move into offices and start putting a LAN cable. It shouldn't be like that. It should be law. Every road, every building, every estate, every structure should have a digital entry. That way, you solve the demand side. So that, let's say I have a house, I have a street of 100 houses, and number 99 buys internet, and I lay cable to the house. You know, I've passed 99 houses. So my ROI is on one house when it should have been on, and it's not my business and an ISP to be digging the road, okay? It is not our business. It is construction business. It should be a building code. There are certain simple things that if we do, we will just leapfrog. You can build everything you want. There are towers today that are not making money. There are data centers that are struggling because we have not linked the demand. We have not made it fundamental human right for everybody to have access to the internet. Not just for suppliers like us building it, but for other people taking it up. Thank you.
Thank you so much, Wale. Sam, just pause before you say your own. 2 questions from the audience. If we have anyone with questions, let's just quickly. Fast, sharp. Sharp. Okay. One. The lady, you raised your hand first. Do you wanna? You can unmute the mic in front of you.
Okay. Hello, everyone. Good morning. My name is Chimi Onomade, and I'm the country advisor to the Trade Council of Denmark on sustainability, maritime, energy, and water and environment. My question is to everyone on the panel, and basically around tech, AI, and the energy mix powering AI. Is Nigeria ready for that? And how do we ensure the net zero conversation as it relates to sustainability for that energy mix in the meantime? What are the realities on ground in the nuance of Nigeria and what are the trends you're seeing in the short term and in the midterm, not long term yet? Thank you.
Thank you. Lolade, right? Okay. Should we take the questions or, okay, Wale is ready to answer.
Yeah, you're talking about energy mix, sustainability, and all that. So we're in the farmland. You know, there's a difference between the city and the village, all right?
Yeah.
Africa has its own nuance around energy, okay? AI technology is, and almost every technology is power-driven. A data center is actually just a small power plant on its own. How do you generate energy? Okay, you say your energy mix, your renewables and fossil fuels and all that. For people who have built years ahead, 200 years ahead, they have factories and they can now pivot away from fossil fuels to more renewable sources, maybe wind, etc. They have that luxury. But here, we don't have that luxury. We're still running on fossil fuels.
Yeah.
And we cannot avoid that fact. So it's a fact. We're just going to have to run with what we have. The grid is unreliable. And so what we've done, however, is to reduce, at least in our own case, we still reduce emissions by using gas. So we build our own gas-fired power plants, captive power plants, so we are assured of our reliability. And to some extent, you know, we can do the best for the sustainability angle. But globally, overall, in other areas, we make up for it. So we do have a science-based target for sustainability. By 2030, we're far ahead of it. We're very green. But we have to realize that in Nigeria, you cannot have, and again, there's a very interesting discussion, which I will not go into too much. You have to realize also that when you talk about data centers, how many solar panels do you think you need to power a 1 megawatt solar panel? The campus we run here in Lagos alone is taking almost 7 megawatts already. How much is it being, producing? So you can't power those things with renewable. A steel plant, we're a developing country. A steel plant cannot be powered by solar panels, etc., etc. So I think that's a very different discussion.
Thank you so much, Ole. I know Mr. T wants to add as well.
No, I think I just wanted to speak to sustainability because it means different things to so many people. But I really like the very basic definition of sustainability. And sustainability is this generation having the right to do whatever they want without denying the next generation their own right to be able to do what they want as well, what they choose to. And I think if you take it that fundamentally, then you start to see something different and you see the opportunities. The entire world, particularly Europe, pushed for what they now call the net zero. And even that created confusion. And NGOs picked net zero to mean zero fossil. Quite frankly, it's impossible to have zero fossil within the energy mix. And unfortunately, depending on what side of the divide you sit in, the Russia-Ukraine war actually revealed the fragility of the European energy systems. Today, Europe is burning more coal than gas. And if you go 3 years back, we as Africans have been told, don't worry about that. You have enough sun, put some wind vanes on the Bar Beach, and do all of that. Even that we've now found out are mostly subsidized. And in the face of that subsidy, there's the cyclical nature of renewables. So for me, net zero is not zero fossil, it's impossible. Last year I was on a panel and 3 NGOs actually came at me. You are killing the planet. I said, hold on, I love your shoes. Do you realize they're from oil? By the way, how did you get here? You came on a camel? No, I came in an Uber. Oh, it's electrical Uber. Someone generated the electric to charge that Uber that brought you here. So I think the conversation should go to energy mix rather than energy transition. And from an African perspective, it's integration of what we have to achieve what we need, not necessarily what we want. We're not at the want level yet. 50% of Africa And over 40% of Nigeria does not have access to the energy at all. So when you say energy transition, I always argue you cannot transition from what you don't have. Let's even have the energy first.
Thank you so much, Mr. T. We have a question from the gentleman in front. Yeah, I think you raised your hand. You forgot to.
Did, but it looks like, well, by the way, my name is Abdurazak Issa. I'm co-founder of Walter Smith and on the board of Renaissance as well. But I think my question was basically asked by the other lady, because what I saw sitting here on the panel is a business opportunity, really. I'm not talking about sustainability. I'm not in that space. But I see a link between AI and the energy business. Recently, I was traveling in the US, and I read a news item where somewhere in Pennsylvania, about $10 billion was being invested to build a power plant to power AI only, using gas, the gas plant. And I know that Renaissance is sitting on tons of gas, tons of it. It's one of the biggest holders of gas concession in Nigeria. And then I have a gentleman there who's talking about building AI facilities, data centers, and they're building cluster power for themselves. You're going to do building all that infrastructure for yourself. Why don't we look at a link between both of you? How can we ensure that Renaissance can use that gas and give you all the power that you need that will make you very competitive and make pricing very competitive in Nigeria?
A round of applause.
Yeah. So that was going to be my
Thank you for the shareholders in the room. That was a lovely perspective.
No, I think what he's saying is Wale needs to speak to me nicely.
Yeah. Any other questions, thoughts before we close? Okay. Yes, please go ahead, sir.
Hello? Yes. Sir. Good afternoon. So my name is Adewale Champion. I'm the CEO of Touch Asset Management Limited. To put it in context, this will be my fourth meeting of this nature, talking about the micro and all of this outlook. And then I've read about 7 reports as well. So there's so much of optimism in the air that, of course, things will change and all of that. Now, the question is, an average Nigerian on the street wants to feel the impact of the reforms and all of that. Like Uncle Frank said earlier about the CEOs and, of course, the gate man. So the question I have is, how soon can we begin to say that the numbers are actually making sense? And what are we not doing rightly? What do we need to do differently so that in the few years to come, we can actually say we are in the right trajectory, by the way. Let me give an example, and I stop on that. A friend called 2 years ago or something from the UK and said they got something in their box and said, oh, you have, I think, £100 rebate from power. They were so surprised that, oh, okay, so things are happening here and it's working. So when are we going to get to that point that somebody on the street, like the gate man, will say, actually, the reforms are working? Thank you.
Thank you so much, sir. Is Shegun around? Shegun. Okay. I don't know if any of the panelists wants to chime in on what he's asked. When would it start to make sense? Time-wise.
It's difficult to predict, but I had some predictions that I made. I mean, the government has a target for 2 million barrels of oil per day by 2027 and 3 million by 2030. I used to kid when I talk to people around, we are giant of Africa as Nigeria. We were giant of Africa when we mattered to Africa. Today, I spoke to a friend of mine, Nigerian, French-speaking Nigerian, and he says, you are inconsequential to me as Nigeria. So whether you exist or you cease to exist today, as somebody from Nigeria, I actually don't know. I won't feel anything. So I think the reforms are, in my view, putting us back to that center stage where we begin to matter and make the difference to other people. 2 million barrels a day. You saw the difference between hovering between 1.1 million barrel and 1.5 last year. And this year, with Renaissance support, we are looking to move to at least 1.9, 1.8. That is part of what is holding the dollar stable. Because like it or not, this economy is rising and falling on the value of the naira. And I think you heard from Danladi. Over 85% of the foreign exchange earnings is from this industry. And if this industry is properly reformed and set up properly, that cascade effect will be much faster. But if you say when specifically, it's difficult because, again, there's a transition going on. The government says, we're just 3 years, the reform is going on, the transformation is happening, but we have an election. And someone has coached me a long time ago that the only thing that matters to a politician is the next election. So in the middle of while they are trying to transform and bring about this reform, I'm afraid we may experience a pause until the elections go by, and that will elongate the time interval between which you start to feel it. But if we achieve the relative stability that this industry requires, then you will see it much faster. At least the naira will be stable. Inflation you can see going down. Yes, the Getman that Frank spoke about is saying, I don't know yet, but very soon, everybody will know. I believe that optimism sits with my hopeful comment earlier.
Okay. So, you wanted to say something sharp?
Yes. Quickly, while I don't have a crystal ball and cannot give a direct answer, I think as local production capacity improves, we begin to see a shift, and that is already happening. And with some of the ongoing reform, in the rail sector, you begin to see these companies create more jobs as we produce more locally. There is still pressure on household income, but inflation is dropping. I don't think it's going to be a one-year turnaround. We are on a long journey, but we've started that journey. Government policies are also going to support. I'm thinking of issues around security, internal security in the transport corridor. If we achieve that, that is going to create a lot of job opportunities. And most people just need to have jobs, be able to earn their own income and feed their families. So as companies in the rail sector, I believe the rail sector is going to galvanize the growth in this economy. And as they begin to expand, we start to see little shifts and improvements. And the Getman, who will have a job and his children will go to school and have jobs as well.
Thank you so much, Ms. Folake. And we'll just close with Sam. What's your question and what's the answer?
Oh, okay.
Are you the magician left?
No, it's a 2026 outlook.
One word?
Bold.
Bold. And on that note, we end this panel. Thank you so much to the panelists. A big round of applause to every single one of them. Thank you, Ms. Folake. Thank you, Mr. T. Thank you, Danladi. Thank you, Wale. And thank you, Sam. We may rise and leave. So I'll call on Elizabeth. Yeah, we want to take pictures. Still sit? Okay. All right. So still sit. Don't go yet. All right. So I think together with Pedro, is Pedro here? Oh, okay. All right. Do you still want me to give the presentation? Okay. To launch it. Pedro, come. Yeah.
All right, very quickly, I know I'm standing between everyone here and lunch or a very important business meeting. I want to talk very quickly about our annual CEO survey. So we're launching the Nigerian perspective today. Let me give you a quick bit of a background. Every year, we conduct a survey of CEOs across the world. And this is the 29th edition of that CEO survey. And we surveyed over 4,500 CEOs globally in close to 100 countries, including a handful of CEOs in Nigeria. And what this report tells us, it tells us a number of things. First, it tells us what CEOs are prioritizing in their businesses and how those priorities compare to their peers across the world. Secondly, it tells us how those priorities are changing, because we've been doing it for over time, so we can tell how those their perspectives around the business environment is changing. What do we want to talk about very quickly? As we've said, generally in Nigeria, there's confidence in the economy. Everyone believes that things are looking up. There is more, 91% of CEOs in Nigeria have a very positive outlook on 2026. There is still threats, which I'll come to a little bit. Now, if you look at this report, 91% of CEOs say they expect economic growth to improve in 2026, and this compares to 64% in 2025. That is a massive shift. In just 1 year, it's moved from 64% to 91%. Even more significantly, 56% of CEOs are confident in their organization's ability to grow revenues in 2026, and see how that compares to the global average. However, there are still threats that are on the minds of CEOs. But what is interesting, what these numbers tell us, is that CEOs Nigeria's perspective of threats is shifting from external factors to internal factors. Last year, they were worried about inflation. They are worried about macroeconomic stability. They're worried about exchange rate. This year is shifted. What are they thinking about now? They're thinking about talent. They're thinking about technology. They're thinking about cyber risk. So CEOs are now beginning to think, what can I do internally within my organization to prepare me for the world that we're in today? Now, across the world, what are we seeing CEOs do? What are their pillars? What are their priorities? Number one, strategic reinvention. I think every single person on the panel today has spoken about this in one shape or form or the other. You can't do the same thing you were doing 10 years ago today. The world is moving too quickly. There are too many moving parts. You've got to be strategic in how you think about your business. You've got to change your model. You've got to think about your talent differently. You have to think about new products, new markets, new inventions. And that is the same thing for Nigeria. If you go down, tech, data, and AI, I don't need to elaborate on this. Everyone here today has spoken about how that is going to disrupt their business. Like I said earlier, it is not whether it will disrupt your business, it is the impact, it is the scale of that disruption that remains to be the question. So CEOs are preparing for that, they're investing in it, and they're training themselves for that. Cybersecurity and trust, CEOs are we're sitting here today having meetings talking about the opportunities that tech data provides for us. However, bad actors are having the same meetings, right? Fraudsters, scammers, hackers also see the opportunities within tech and data. So we have to be mindful of that. As you're thinking about the opportunities that tech presents, you have to also think about what kind of threats that it potentially portends for your business. What do you need to do as CEOs going forward? One, innovate to compete. Wale said it. Innovation is not something that happens by chance. It is not something that happens by accident. It is something that is planned for, that is embedded in your operations, and that you actively engineer your company to execute. Secondly, scenario plan. And there are perhaps 3 to 4 or 5 possible futures. How prepared are you for any of those possible futures? You've got to think very clearly about that. Invest in digital and AI. Make bold investment moves. 2026 is a year of bold investment moves. No more planning, no more conversation. This is the time to make that move and be bold about it. Proactive tax strategy. There's an old saying that the only 2 things are certain in life, death and taxes. So you must plan for your tax. There must be a tax strategy, and you must be prepared for what it means. And it is not just a compliance thing. It is about strategic execution as it relates to tax. Talent. In this part of the world, in fact, when we compare this to the global report, here, CEOs are more concerned about talent than CEOs outside of here. Of course, that is obvious, the jackpot syndrome. All are talent. They are living here for other shows. So we have to have a robust talent strategy for retention, for attraction, and for reward. So that's quite important for CEOs. Compete on trust, embed strong governance. Companies, your competitive advantage is your ability to report quickly, the strength of your board, the strength of your corporate governance, that is a significant competitive advantage. And finally, sustainability and ESG. They have to be integrated into your strategy. Here's an interesting thing. This is not as big a priority for Nigerian companies as has been discussed here, as it is for companies globally. But here's what we've seen in this CEO survey. Last year, we asked CEOs, how important is this? Only 3% of CEOs said they were thinking critically about ESG and sustainability. This year, that number has increased. It is not still very high, but it's increased by 10% to 13%. So more and more CEOs are thinking about ESG as part of their strategies. So that is what I want to leave you with. Thank you, everyone. So over to you. I hope I did that very quickly.
Yes, you did. Well done, Sam. Thank you so much. So we're going to just launch this CEO survey with a picture by all of the panelists holding the CEO survey, which has been handed to them just now. I believe the audience has also gotten that, and I'd like to also call on Femi, Chijoke, and Kunle, the insight providers, to join them. We are past, where's Ken? Ken, join. Wale Agemi, Mr. Rio Olusekun, and John Anim. Editor, Business Day, Editor-in-Chief, Business Day. Where's your CEO survey? Take. All right. Thank you. Yeah, I do.
You have to stay in the middle.
All right.
And still between. Are you sure?
Hello, thank you so very much. I think we've had a very interesting session this afternoon. We started in the morning. I said this is like, Sam, I think this is like a free MBA class we've just had, looking at the economy and looking at what's happening in the future. We thank you so much for coming. We will need a picture of the panelists. Panelists, if you can just stay behind so we can take a picture for the press. Panelists, please come back up. Let's just take a picture for the press, please. Sorry, please come up. Let's have our panelists come back up. Siri, can we just join the panelists so that we can take a picture for the press? Panelists, thank you so very much. Siri, please join so that, yeah. Again, we thank our panelists for your immense contribution this morning. We shared from your industry and shared from what's in. We do appreciate you. We thank everybody for coming. Just to let you know that lunch is served. Just take a staircase. We do have plenty to go around. Please don't go away and don't waste our lunch. We thank you. We look forward to seeing you again next year for another exciting section. On the brochure you are giving, our contacts are there if you want further information or you want somebody to come and talk to you. We are willing and available to do that. Thank you so very much. Do have a nice day and enjoy the rest of the afternoon. Let me join the panel before they go.